that tells us then that if we're going to see a let me just quickly refer to the dollar index. Okay, the level in the dollar index is 77.71. Okay, it's the top of this range. It was the top of the breakout, and it was confirmed by the low of this second wave. Okay, so we've had the resistance and the support, and we are now trading back exactly around that level. So 77.70. If we're going to trade back above here in the dollar index, okay, we must be wary of the dollar against other individual currencies, such as the British pound. Now, if we understand that the British pound is the second weakest thing to the US dollar, if the dollar's going to stop a decline or have a little bit of a bounce, we are going to look to the cable for having the better reaction to it. And hey presto, we are around the well-known 159.81. For those of you that have been doing this for a while, we go back to last year. The 159.81 was at the end of 02, was a momentum high when we went into, it was the middle of this consolidation phase that we moved out from. It was a momentum high here that came to provide a reference point in this large area of price acceptance. Okay, so we made a low here, and this was probably easy to see on a daily. Actually, let me just switch it to a daily quickly. So the low here, 159.81, we traded back through it. The market didn't want to trade below it, and it gave us a lovely failure trade and pushed us right back up through the 165. We came back and we found some more support here. Then when we traded back to it here, we pushed down to, and from which point we made the lows of 148.32, another famous level. So now we've traded back to the 159.81 back in end of July, beginning of August. We've moved down and we are back to the 159.81 again. This is a lovely level to trade because it's both a long and a short point. This is clearly a structure. This is a phase 1 to this, through this. When we trade, if we trade through here, we'd expect certainly a push to 163.20. Has to be. But we traded through, see Thursday, we traded through above 159.80 only to retrace all the way back and to be more or less no change on the day. Alright, had another go, closed below it again today, traded up to come back down, and that's where I made my trade. Today when we traded up towards it, I sold it, and I've got my stop the other side of the 159.80. I've got a stop and reverse. So if I get takers, I'm expecting if we trade above 159.80 and move to 163.20. So I'm taking little risk, you know, but because I know the 159.81 is significant enough, I'm happy. And actually, when I was up there, it's traded down. It's traded down pretty much all day. Since, but you can see why I did that. This just may be a lid on the market, particularly if that dollar index finds a little bit of support, or just stops declining for now. We just could get a trade back to the move back to the 157. Okay, so on that basis, then our structural long is, guess what, 159.81. our structural short is the 157.06. So both these lines are structural long and our structural short. If you want to be reminded of the 157, it's this outstanding low here. You see back here we get a bit of noise around the level before we make a push further. So they're both nice levels and certainly ones to watch. If we trade above this 159.81, make sure you're long above this high. This 160.16. That's where, you know, the 160.16 is above these highs here as well. So we should, above this point, you know, we should get a push higher. So there's your structural long and structural short, 159.81, 157.06. Going to the 200 tick then. There's our 159.81. And there is you see what happened here, look. Today we came, there was a 2-day high here, look. We came up, we traded pretty near to the 159.81. There was the selling opportunity with a stop the other side, and we traded down. We traded down in the US session all the way so far. Now it's fairly choppy. There's quite a bit of movement. So the long is 159.81. Again, we'll use the structure as the short-term long. The short is 158.20. Yeah, we want to take out these lows. Look, 2-day, 3-day, and 4-day low. It's easy. That's it. That's an easy reference point. I'm just being told by security something. I'll respectfully ignore that. So short is 158.20. Then clear. It's a pretty clear level below all these bunched up 2, 3, and 4-day lows. 158.20. The short stop, you know, we're going to use along the lines of Philip's suggestion on the dollar yen. We want to stay below this level, so we're going to have a nice close stop at 158.40. Okay. So if you're short below here, you want your stop. You don't want this coming back in because you might get this move. We don't want to be caught up in that. So we want the stop at 158.40. Thank you very much. And the long stop, if we're long at 159.81, we're going to have our stop just under the 2-day high where the market has clearly respected this level. So we'll take the 159.55 as our long stop. Okay, so both of these, the long and the short, we've got tight stops in, so be aware of that. Okay, be aware that you're, you know, taking low risk entries on here. Okay, so that's quite interesting, that cable, I think. Okay, moving on. Let me just stop this recording.